Welcome back to another Millennial in Debt video. Future millionaires. I'm going to be talking about 3 unconventional ways that I had no idea that my credit score was going to impact my financial life and my financial decisions. And this video is sponsored by Credit Sesame.
The Credit Sesame app is incredibly user-friendly and is your one-stop shop for viewing your credit score, real-time credit monitoring, theft protection, and personalized credit card and loan offers. Did I also mention it's free? This is a great first step to open doors towards reaching your goals, whether that's buying a new car, a new home, better insurance, or better loan rates. They offer you personalized tips and recommendations to help you improve your credit score and do more with your score. Sesame Cash is the first free all-in-one account that builds your credit and pays you when it goes up. You can create a free account by downloading the Credit Sesame app in the App Store or Google Play Store without worrying about any fees, credit checks, or separate cards.
Credit Sesame believes that a better credit score can open doors, and I just so happen to agree with them. Plus, Credit Sesame is also the only credit monitoring app that does not charge any fees, no credit checks, and they give you cash back up to $100 in your first 30 days when you improve your credit score. I love cash back. All right, so let's dive right into it. So the first time that my credit score impacted my financial life that I really didn't even know, that it was going to do it in this particular way was when I was trying to get pre-approved for my first mortgage at 25 years old in New York on a teacher's salary. What was I thinking? But yes, I know what you're thinking. Well, of course, your credit score is going to be needed to help you get approved for your mortgage, but not in the way that I was thinking about it. I thought that if you paid all of your debts or if you paid all of your bills, that you would have tremendous, phenomenal, amazing, stupendous credit, and I was wrong. Of course, healthy payment history is very, very, very heavily weighted when we're calculating our credit scores, but that is not the only thing that is heavily weighted. Your debt to income ratio, which I didn't even know what that meant at 25 years old, greatly impacts your credit score. So here I was making payments from 2010 to 2013, thinking I was doing the thing, and my credit score really wasn't as great as I thought, and I really wasn't approved for very much when I was trying to get that first home. So of course, if I had Credit Sesame at the time, I would have had real lifetime monitoring my credit score available, but I also would have had personalized tips and advice on how to improve my credit score in ways that I wasn't thinking about at 25 years old. Besides that, when I went to purchase my first car, again, you're like, hello, credit score, buying cars, yes. Of course, my credit score impacted the rates that I received for my first car, but it also impacted the rates I received for my car insurance. I didn't even know they ran your credit score when they were trying to give you car insurance. And a lot of times people like to say, well, if you don't have the cash, you can't pay for this. Car insurance? Car insurance? So yes, my car insurance rates have been greatly impacted by 2 things. Of course, how well I drive and my credit score. So if you're ever thinking, well, my credit score really doesn't matter in certain things because I'm not going to be doing these things, it applies in more ways than we think. And the third way that my credit score impacted my financial life was when I was going to buy my first home, I had to go through 2 rounds of approval, not just with the bank for a mortgage, which of course, again, credit score is needed, but also with my board. I live in a co-op, so if you're not familiar, because co-ops are very, New Yorkish. I live in a co-op, so very similar to a condo, you have to get approved before you can move in. I was thinking they were just going to be checking to see if I'm a good neighbor, I'm a teacher, I have the funds to cover the HOA fees, but no. They also were trying to make sure that I was financially responsible enough to not foreclose on the home, right, to be able to pay my mortgage and also pay my HOA fees. So credit scores are not just debt scores, as a lot of people like to think, oh yeah, you've gotten this credit score because you've gotten out of debt or you've paid this debt. No, your credit score is really just a healthy reminder to all types of financial institutions that you are financially responsible. So if buying a home is not currently on your agenda, landlords often do run your credit report as well to make sure that you're not only going to be a good neighbor, but you're also going to pay the rent on time. Financial institutions like to take on as minimal risk as possible, and your credit score shows how much of a risk or liability you are going to be when they come into some sort of agreement with you. So please, please, please keep that in mind. And of course, thank you, Credit Sesame, for making this video available for us so we can talk about healthy ways to improve our credit score and have a better financial life. Catch you in the next one. Bye.